Is the big, beautiful bill already priced into the market? That's what I'm going to be discussing tonight. Hello, traders. I thought I'd try and get a quick video out before the week starts. We had the big, beautiful bill passed on 4th of July. We had a really nice market rally last week, Thursday. It was an abbreviated session. Market made a new all time high. So, we're going to also discuss what news hit the market and what we've got coming up. But before we do that, I'd like to take a look at our last pick, AEVA. That was last Sunday. I had suggested selling the $30 puts for about $1.60, and that was the July 18th expiration. And you can see how on Monday the stock really dropped hard. But you can see that the stock also rebounded back above $32. It's at about $33. The bottom line is I am a willing buyer at $30. And if I get assigned, I'm actually going to be buying the stock at $28.40. That's the kind of trade that I want to be doing right now. And the reason that I like this stock is because of this nice, tight, orderly pattern here. Now, I should mention, I'm not doing a video cam component today. So just focus on the charts and let's keep things rolling here. So I like that trade. I still plan on buying the stock if it does pull back to that level. I think it got down to about $26, $27. This nice, tight, orderly price action is what I'm going to be focusing on. I'm going to be looking for a similar play. I also showed you Mara, M-A-R-A, on Wednesday during our live event. If you haven't watched that live event, please go to that tab on my YouTube channel and watch it. Harry and I answered a ton of questions. We had a lot of great trade ideas in it. Mara is one that I liked because of this breakout here above the 200-day moving average. And what I had mentioned in that video was I want to see Mara hold that breakout for at least a day or two. Well, now it's got 1 day under its belt, and it's likely to have another day under its belt tomorrow, Monday. So what happened with the futures overnight? They've been open now, and we can see that the S&P 500, I believe, is down about 18 or 20 points or so. And the headline is, oh, the market doesn't like the fact that Trump is not going to impose these new tariffs right away. He's going to wait till August 1st. I think that's a bunch of hogwash. What happened on Friday was we had a better than feared jobs report, 147,000 jobs. Okay, so nothing over the top stellar, but everyone was expecting something below the 100K mark, and it didn't happen. There were a lot of jobs added to state and local governments, and that's where a lot of the job growth came from. So the market on that better than feared number rallied on Friday, and it never looked back. Once we had that initial move higher, it was an abbreviated trading session. We had a likely big, beautiful bill that was going to be passed over the weekend. So there was no real reason to sell the market. Everyone was going to buy if they did anything, but they certainly weren't going to short into that likely event. And now that we've finally gotten the bill passed, you're seeing the market pull back just a little bit. Well, is that bearish? I don't really know. I know that that big, beautiful bill was one of the last catalysts that I was looking for to the upside. And until that bill was passed, I wouldn't even remotely consider shorting right now because we also have earnings season coming up. And we also wanted to see what, if any, trade deals would be passed over the course of the next week or so. That tariff deadline is July 9th, and it's approaching very quickly. Japan has already said they're not likely to sign a deal for at least a couple of months, and they're not going to force themselves into a corner just because there's a deadline. Now, those countries who have not been negotiating are going to get a letter, and in all likelihood, that letter is going to state that they are going to have the April 9th original tariffs imposed upon them. So that news could be a little bit bearish for the market this week, but all told, I feel that the tariff news, the trade deals, everything is relatively priced into the market. And you can see that before all of this happened in here, this is all the trade news, tariff jitters that we saw back earlier in the year. Well, the market's been able to recover all of that. And I believe that it's somewhat numb to the tariffs. Right or wrong, we haven't seen any inflation. And so the market had been waiting for any signs of inflation. Market's been waiting for any signs in weakness in job growth. And it just hasn't been there. So the market's been able to continually float higher. Now, the big, beautiful bill that is stimulative for the economy, lots of big tax cuts. So I believe that the market is going to like that news on a longer term basis, but there's some short term headwinds that the market's going to have to deal with right now. And part of that is the fact that we're getting into earnings season, and we already heard from FedEx that they're not going to be providing any guidance beyond the current quarter. Companies feel that there's just too much uncertainty. They don't know how everything's going to play out. Plus, FedEx also guided lower. So that's something we're really going to want to watch over the course of the next 2 or 3 weeks. Are companies guiding lower? The expectations for this quarter have already been reduced. So good news is there'll probably be lots of beats, but the percentage growth rate for the S&P 500 has been reduced to about 7% from 11% about 3 or 4 months ago. So we're starting to see those downward revisions. Again, the job scene, in my opinion, is starting to deteriorate. Global economic growth is the major concern right now. And from a timeline standpoint, I believe that towards the end of July, as we start getting into earnings and mega cap earnings, that's when we could start to see some nervous jitters in the market. This has been a fairly meager rally in here. Even though the market has put together a nice week, this was the bombing in Iran. So that was good news from a market standpoint because it reduced uncertainty and there weren't any casualties. So it was very quick. It was in, it was out. And that kind of got the ball rolling in here. And then now we had the big, beautiful bill pass. So those are some really big positives for the market. And now we're going to get into the nuts and bolts of it, which is earnings season. Are corporate profits holding up? So, what am I doing? I'm going to wait and see. I'm not chasing this market rally. I'm preferring to trade from the long side, but to do so on a day trading basis. And I'm also looking on a swing basis to sell some out of the money inflated option premium. When I say inflated, stocks that have very high option implied volatilities that have nice technicals to them. I'm looking to sell that premium. I want to take advantage of accelerated time premium decay. I want to distance myself from the action so that if we get a little bit of a pullback in here, I'm giving myself plenty of breathing room to weather that storm. And Monday morning, S&P down 18, could be down 20 points or so. We're going to see a little bit of a pullback. That's fine. That's going to give me an opportunity to enter long positions and to take advantage of this strong uptrend. So, what will I be looking for Monday morning? I'd love to see a pullback that lasts maybe an hour, hour and a half, and then I'd like to see support form on a M5 basis. Perhaps something like this or something that might even last a little bit longer. This is the price action from Wednesday. You get a gap down. Buyers didn't wait long. They scooped it right up. Again, knowing that we had that big, beautiful bill coming up. And there's the price action that we had on Friday. Again, mind you, it was an abbreviated trading session. So we had that early push higher. Well, who the heck is going to short in a holiday abbreviated session when you've got better than feared employment news and you've got the potential for a big, beautiful bill to get signed? The answer is no one's going to be shorting. So the market just drifted higher. And let's see if we've got another day. This might be the type of price action that I would be looking for. You get that sell off initially and another test, another probe lower on a 5 minute basis. And now you have a higher low. Support is starting to form. You've got the market getting above VWAP. Okay, this is a place where I can try some longs on a day trading basis. And this pullback right here might give me an opportunity to sell some really attractive out of the money put premium. That's what I'm going to be looking to do tomorrow, Monday. So for the first hour, I'm not going to do a lot. I'm going to evaluate. I want to see that market support. I want to see how much the market pulls back. How much of this big, beautiful bill was already priced in. So as I take a look at some of the stocks that I like, I still like AEVA. I love selling those out of the money puts. You could probably even go down to the $25 strike price and get some really nice premium. Mara, I like that. Could you sell some out of the money puts on that? You could, but you got to make sure that those puts expire before August 7th. And that's one of the dangers that you're going to run into right now with selling put premium is you need to be very aware of those earnings announcement dates. And so right now, I'm looking for companies that won't be announcing earnings over the course of the next 3 weeks or so. And I'm also taking a look at when some of these mega cap tech companies announce earnings. Microsoft, for instance. Microsoft is super strong. I love Microsoft. Same type of price action that we are seeing in AEVA. This tight, orderly grind higher, staying above that EMA 8 and barely even getting below it and just continuing to power higher. So Microsoft, yes, on a pullback Monday morning, market finds support. Might I be looking to day trade Microsoft? Sure, absolutely. Stock is great, very resilient, has a tendency to rally into earnings announcements. The important thing about Microsoft that I wanted to point out is that given my suspicion that earnings may not come in as robust as everyone is expecting, we've got Microsoft announcing earnings on July 29th. So I'd kind of like to have my bullish put spreads expiring before that. I'd kind of like to have my naked put rights expiring before that because if we're going to get any kind of market decline, it'll probably be coming sometime in August. And the reason for it is that the Fed has remained hawkish and we're going to see them go into recess. So you're not going to hear a lot from them. And they're talking about maybe one rate hike this year, but half the Fed officials feel that there won't be a rate cut. Excuse me, I hope I didn't say rate hike. We're talking about rate cuts right now. Half the officials don't feel that there's going to be a rate cut this year. So Fed remains very, very hawkish, and they had a decent employment report on Friday to kind of lean into. So they may not give any indication toward the end of July that they are going to cut rates in September. So when Washington, D.C. goes in recess, you start getting some very murky guidance from corporations as they release earnings towards the end of August. The market starts to get some nervous jitters. It starts to probe for support. It starts to roll over. Now, this isn't unique to this year. This is something that we see every year. So I'm going to be staying very passive right now. I'm going to be trading the long side, but for the next week, 2 weeks, 3 weeks, I'm going to keep my trades fairly short term duration. I'm going to be selling some out of the money naked puts on stocks that I want to buy at a lower price. And I'm going to be day trading very strong stocks when I get an initial market decline early in the day and the market finds support. So I'm doing everything that I can to stick with that longer term market uptrend. Any pullback is going to be an opportunity for me on the day trading side. So let's take a look at some stocks that I like right now. I ran some searches, and one stock that I like is AVGO. O. And you can see it right here. You can see how it had one little sell off this week. It tested the EMA 8 and flew right off of it. And you can also see how the stock recently announced earnings on June 5th. What does that mean? That means they're not going to be announcing earnings again until September. So I've got plenty of time to sell out of the money bullish put spreads. And we can also see that after a small little negative reaction to that earnings announcement, the stock has actually done very well and it's been able to grind higher. So, where would I be looking to sell these bullish put spreads? Well, AVWAP-E is kind of the first line of support, and I also like this little compression right in here. That's also a nice level of support. So, what I did was I went in and I took a look at what option premiums there might be and what I could possibly sell. Well, here's a trade that I like. So I'm only going out to July 18th. So this trade is only going to last for 2 weeks. And I went down to the 255 strike price. I like selling the 255 puts and buying the 252 puts and doing that for a 50-cent credit. There are $2.50 between the strike prices. If I bring in a 50-cent credit, 250 minus 50 equals $2. That's my max risk on the trade. That also is my margin requirement for the trade. If I'm bringing in 50 cents in credit, 50 cents divided by that $2 max risk, that's a 25% return. But Pete, look, you can't get that trade done for 50 cents. It's 23 cents bid offered at 34 cents. How am I going to get a 50-cent credit for that? You're not going to get a 50-cent credit for it based on where the stock closed Friday. But if the market is pulling back overnight and we get a little bit of sell the news, which is big, beautiful bill related, so everybody's expecting it, everybody's waiting for it, and then the air gets let out of the balloon when the bill actually gets passed and the market pulls back a little bit. That's the type of price action that we could easily see tomorrow. And if AVGO pulls back a little bit, this spread right here is going to come into play. And I love it because the stock has been strong relative to the market. They're talking about trade deals with China and relaxing some of the chip uh, restrictions that they're going to be having. Well, that helps AVGO. It'll also help NVIDIA. So I like this trade. I think this is a nice one. I can also go through and take a look at some of the other stocks that came up on the list. Bank stocks are generally going to do well when we have nice full employment. So when I saw that number come out on Thursday, I thought, hey, if anything does well, the banks will probably do well today. JP Morgan is a stock that I traded early in the day, and the stock really took off on that news. Now, bank stocks don't move a whole lot, and as earnings season approaches, they're going to dominate that earnings scene. And you can see 7:15, we are only 10 days, 9 days away from earnings season kicking off. So we're not going to have to wait long to see if there's any kind of earnings warnings. So the bank stocks, I wouldn't be playing now, but I thought they were a really good play on Thursday because they're going to start chopping around a little bit and they're going to be preparing for earnings announcements. So what else do we have that looks good in all of these stocks right here? VRT's been on a really nice run. You can see any pullback in that stock, I think will be a buy. Nice, consistent upward price action. NVIDIA looks pretty good. You can see how it's also flirting with a high right in here. TSM, another chip stock. So these will be some of the stocks that you want to favor on that market pullback because without that market pullback, they've already been powering higher. If we get just a tiny little dip, this upward momentum is going to be scooped up because we can already tell that buyers are engaged. Another one that I like, and I'm going to give you a naked put right, JOBY. You can see nice big volume in here. And the company signed a contract. They had a contract for automated taxiing for airplanes. And we've had a lot of incidents on the runway, and I think that this stock has the potential to continue to move higher, just like AVEA. And I like this little breakout in here. I like this volume here. It has high option implied volatility. So if I can sell that $10 put right in there and bring in some decent premium, would I buy that stock on a pullback? And the answer to that is I would. Let's see what it did on Friday. You can see how the stock just kind of gradually floated higher, but it did have some decent volume during the day. Let's take a look at the puts, see where they're trading. JOBY might have to go out to the July 25th expiration. There you can see that those puts are 40 cents bid, offered at 50 cents. If I put up half the strike price, which $10 divided by 2 is $5, put up half the strike price, $5, that means that I can buy the stock on Reg T if I'm assigned at $10. $5 up, I make 50 cents on that, and I would want to sell those for at least 50 cents. And if the market pulls back on the open tomorrow, I'll probably be able to get that and maybe even some more. So I'm just going to evaluate and see where these premiums are. And that would make me long that stock, not at $10, but at $9.50. Well, if we take a look at what that recent support level was, it was about $9.60. And so, yes, I'd be happy buying the stock there with lots of good news. We had that big contract signed, lots of decent volume coming in. That's the type of play that I'm going to be looking for. So, yes, I am trading the long side, but I'm doing so in a very conservative fashion. So I'm not buying calls left and right. I'm not speculating that this market trend is going to continue to grind higher, because I do see some potential speed bumps coming up in the course of the next 2 or 3 weeks. That's how I would be playing it. I hope this information has helped you out. I hope you had a great 4th of July weekend. We're going to get right back at it this week. We have a very, very light news week. Hardly any earnings coming out this week. Hardly any economic releases coming out this week. So that means that the market's just going to chop around and it's going to wait for that news, and that lines up well for any type of premium selling strategy, selling out of the money bullish put spreads, or selling naked out of the money puts on stocks that you'd like to acquire. Thanks so much for watching. We will see you later this week. I'll try and get another video out Wednesday, and perhaps I'll get another short or 2 out this week as well. A short video, I should clarify. Thanks so much. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.